Eric Mwadhi from Mwadhi.com. Let's take a look at why you should always extend your lines whenever you're studying charts, because sometimes they become relevant even down the road. For example, take a look at the monthly chart for AKS Steel between 94 and 2011. What I want to look at here are these major lows in 2008, early 2009. So what we can do here is go to the previous breakout line. In fact, there's two. I'll show you how we get to that. There was a previous resistance line here in the, let's call it, late 90s to early 2000s, and then there was a breakout. So this breakout at this point here brings the stock off the lows here of about $5. The stock goes on to go as high as, let's call it, $18, $17. That was a big run at the time. Now extend the same line, and what you see is that it was tested again with a successful bounce on the green line, which was for the lows of 2005, and of course eventually the stock would rally and move higher. So that backtest level, and of course we're talking about this slight backtest of that green line, held during the lows of 2005. Now if you extend the same line, you can see here we touch the line with a double bottom support with a backtest which was successful off the lows of 2000, or let's call it about late 2008, early 2009. So that's one line that was relevant. There's another which we can draw here. So those are breakout. So this breakout here in the RSI took the stock on its biggest run ever, jumping here from about mid, let's call it here about $13, $14, all the way to the highs of about 67, 68 in a short period of time. So we know that RSI movement was successful. This RSI movement here, short-term breakout. What we do is we extend that line this way, and again you see that the stock did come back and backtest the same line. It held successfully again for the lows of late 2008, early 2009. That's why I say keep your charts or the lines on your charts extended, because sometimes they can give you information that you could not otherwise see on the chart. So keep extending your lines. Sometimes they become very relevant. So that's all in the past. Let's take a look at the current monthly chart. So here we have all data monthly. The stock is up about, let's call it 50-60% for the month. Huge gain. Now what we're going to do is use the same strategy, and we can see off the highs here in 99 before this huge drop, we can draw a line somewhere there. Now this line that I'm drawing happens to be at about 61.8 on this all-time monthly chart. Now this line becomes relevant every time you have resistance on this line with uniform action or rejection. You tend to get a short-term high, double top rejection on this line for the highs here and here. So that line was relevant, let's say relevant in the late 90s. What we need to do is extend that same line. Remember, the theme here is to extend your lines, and you can see that even in the current couple of years we hit that same level with uniform activity and were rejected for the highs of 2014. Let's call it at about $13, $14, and we've drifted back all the way to the lows here, I think $2, $3, and now we are coming back after this nice gain to test the same line. So what I'm saying here is, what this means is, if in the coming month we show resistance and rejection on this line, chances are this is gonna give us a short-term high. So if I own the stock or was looking to short the stock, I would be watching the same line that was a problem going back to the late 90s and was a problem again here in 2014. Rejection on this line month to month would suggest that we've hit some type of a resistance level, and that the next meaningful swing trade is gonna be lower. Otherwise, anybody who is bullish in the stock must have to insist that the stock moves above this resistance line. Otherwise, that is the only way it can see substantially improved prices, or that's the only way it can advance beyond the current levels. Keep in mind the biggest move in the stock's trading history goes back to when the period when it was above this line of resistance. In other words, the stock has moved, the best ever showing was when it held above 69, when it held above 61.8. Again, it entered above 61.8 here, about $15, would stay there until it hit the highs here in the higher 60s. So anybody who wants to see this thing explode beyond the current 60% gain must insist that it moves above the 61.8 level, or the line that was a problem going back to the late 90s. So there's food for thought. Extend the lines on your charts, and sometimes they'll give you some good insight into what could happen, and you can use that information to decide which way you want to play an instrument. Eric Mwatha, Mwatha.com. As always, good luck, peace, and blessings. ESCS. I am out.